welcome to the continuation patterns tutorials. The continuation patterns are a trader's favourite pattern because what they do is when you buy some shares and the share price goes up and you spot a continuation pattern on the chart, then they say to you, you know them shares you bought that have gone up, well they're going to go up even more, which is excellent news. In addition to that, if you see a share and it goes up in price but you didn't quite manage to buy and it went up without you, if you spot a continuation pattern on that chart, then that is a safe place to buy them shares and then you can enjoy the rest of the trend. We've done something slightly different with this series. In the previous series of tutorials, we've had an ebook for every single tutorial. This time we've only got 2 ebooks for the whole 5 tutorials. The ebooks that we've made are much bigger than our previous ebooks. There's a lot more information in them. The first ebook will teach you everything you need to know about the patterns and how they work in respect of sending the share price upwards. So you can look at a pattern and from the information in the ebook work out how high it will send the shares. The second ebook is a workbook. There's nothing but charts basically, and you have tasks for every chart. So you might have to spot a continuation pattern and tell us what price the shares are going to go up to. So that is the new way that we're going to be teaching you the continuation patterns. Before we go any further, we need to show you what the first set of continuation patterns look like. We have 2 bull flags. What you need to make a bull flag is an ascending trend. So the market goes up for at least a couple of days, hits a certain point and retracts. Then you get a continuation of the original trend. That is the bull flag. We've drawn in black here what the pattern actually will look like. So you have what is called a pole, where the market goes upwards. You have a bit of a retracement, and then the market continues on its upside. So the market goes up. You must have a retracement against the trend. Then what you'll find is these pretty much work as little buy and sell lines because you can connect the highs and the lows and then eventually you expect it to break out on the upside. The opposite of a bull flag is a bear flag. To make up a bear flag, you need a descending market of at least a couple of days downwards. Then you need a retracement against the trend and then it will continue its original trend downwards. On the right hand side, we've drawn in black what this actually looks like. So again, it's a pole with a little channel which gets broken on the downside more often than not. You can get bear flags in up market. So the market can ascend, have a little pullback, put in a bear flag and have more of a pullback and then continue its original trend upwards. This is the chart for the Royal Bank of Scotland shares and we've pinpointed a textbook bull flag. You see how it sent the market back upwards. When the market started to fall, we form a bear flag. And you see when we break down from the bear flag how quickly the share price drops. We can draw in a sell line and a buy line on this bull flag. Just to pretty much mark the consolidation against the trend. And then we can draw in the pole that we taught you about. So the market goes up, it pulls backwards against the trend and then continues upwards. We could do a similar thing with the bear flag as well. Notice how the consolidation in the bear flag is a lot shorter than the bull flag. That is a common characteristic that you'll find with these patterns. The bull and bear flag patterns are the most reliable and most commonly seen of the continuation patterns on stock market charts. Tactics for trading these patterns, there's 2 main entries that you can make. You either want to be buying on support of a bull flag, or you want to be buying when you get a close above the bull flag. Let's not forget that a bull flag is pretty much a little channel against the trend, so it has a support line and a resistance line. Similar sort of setup with a bear flag, but you want to be selling on the resistance line or a close below the support line. A little word of caution when it comes to trading these patterns. If you are someone who likes to watch short-term charts such as the hourly chart or 30-minute chart, if you see what looks like a bull or bear flag, it may be something that resembles that pattern. So it may not actually be a genuine bull or bear flag. So we exercise caution if you are going to trade that pattern. In addition to that, the weekly charts, this is patterns in general. If you see a bull or bear flag, it can take quite some time to form on a weekly chart. Sometimes fundamental news, things that are happening in the world, change a little bit too fast, and before the pattern gets a chance to finish, something new has happened in the world and the pattern breaks down. The next pattern for you to watch and learn about is the rectangle continuation pattern.